Mortgages! So many options. Which one is the best? Well, today we're going to look at the two most popular, conventional and FHA. We're going to talk about them both, and that way you can decide which one is the best for you. I'm Caroline Reed with The Real Deal, where we give you the confidence and the clarity that you need to make the right real estate decisions for you. And today we are talking about conventional loans versus FHA loans and which one is the best. Well, of course, there's no one real right answer there. It's going to depend on your situation. First, let's talk about conventional. Now, conventional loans are just loans from a regular bank. Nothing special. They come as low as 3% down if you are a first-time home buyer. And surprise, if you haven't owned a home in 3 years, congratulations, you are a first-time home buyer again. If you are not a first-time home buyer, they come as low as 5% down. And just so you know, the lower your down payment, the higher your interest rate is going to be on that loan. You do need a credit score of at least 620. And again, the lower your credit score, the higher your interest rate. And if you do put down less than 20%, you are going to have to deal with something called mortgage insurance. And if you look on your statement, you'll see it either as PMI, private mortgage insurance, or MIP, your mortgage insurance premium. That's how it will look on your statement. And that is the amount of money that you have to pay to guarantee that you're not going to default on that loan. But the good news is you can cancel that mortgage insurance premium once your loan to value ratio has hit 78%. So let's just say when you started your loan, you put 5% down. So your loan to value ratio, meaning the amount of money that you owe versus the amount of money that the house is worth, when you start with 5% down, your loan to value ratio is 95%. So as time goes on and you're paying that balance down, and if you're lucky and the housing market is going up, so the value of your house is going up, that loan to value ratio is going to drop from the amount that you owe to the amount that the house is worth. And as soon as that hits 78%, you can have that mortgage insurance canceled. Next, let's talk about your debt to income ratio. That is very simply money going out versus money coming in. So if you make $1,000 a month gross and your payments out for car payments and things like that are $500, your debt to income ratio is 50%. And on a conventional loan, the maximum debt to income ratio you can have is 43%. These loans have a loan limit of $510,000, so you have plenty of space to go find that house of your dreams. And keep in mind that conventional loans are shoppable. There are lots of banks out there competing for your business. So go out there and find the ones that have the best terms for you. So now let's talk about FHA, Federal Housing Administration. At some point in the past, somebody decided that each American owning their own home was a great idea. However, lots of Americans could not get into the housing market. And the number one barrier to that was the down payment. So the federal government decided to create a program to help those people get into the housing market. And so they created this mortgage program, which we now know as FHA, which in essence guarantees to the banks and says, don't worry. If these people default on this mortgage, we will pay you. We will make you whole so you won't lose any money. And a little known fact is if you are ever out on the internet looking for houses and you see one that's marked as a HUD home, HUD, which means it comes from the Department of Housing and Urban Development, that home is an FHA mortgage gone bad. That person defaulted on their loan. The federal government took possession of the house and now they have it back out on the market and it's called a HUD home. So let's talk about FHA loan qualifications. First of all, down payment. You can get an FHA loan for as little as 3.5% down if you have a credit score of 580 or above. If you're having problems making that 580 mark, you can still get an FHA loan. If you have a credit score of between 500 and 579, you can qualify with a 10% down payment. The interest rates on FHA loans are almost always lower. However, the mortgage insurance that you have to pay if you are making less than 20% down payment is higher, and it never goes away. So if you are $500 away from being done with that loan, you are still going to make a mortgage insurance premium payment on that very last loan payment that you have 30 years from now. So those insurance premiums, you are going to pay 1.75% of the loan amount up front, either cash at closing, or you have to wrap that into your loan, which make your payments higher, but you are going to pay that upfront fee. Then you are going to pay monthly insurance premium fees every single month after that of anywhere between 0.45% to 1.05%. The debt to income ratio on an FHA loan is 50%, but their loan limits are only $368,000, with plenty of time to go down below and hit that like button. So which one is the best? Well, the answer is, it depends. FHA loans are easier to get, but they're more expensive over time. So they're generally thought of as the best tool for a shorter term loan, 3 years, 5 years, whatever the case may be. So let's say you get one and 5 years down the line, your credit score is better, or you're making more money, your income is better. You can then at that point go ahead and refinance into a regular conventional loan. Conventional loans are more flexible, and they allow you to capitalize on your good financial history. Good financial history will equal better interest rates, better terms overall, which makes them better for a long-term instrument. But have your lender check both scenarios for you. Have them run the numbers both for conventional and for FHA, so you can decide which one is best for you in your current situation. And if you're not quite ready to go sit down with a lender yet, but you still want to get a good idea of the differences between the two, I'm going to leave a link down below in the description for some mortgage calculators at NerdWallet.com. They just have a huge treasure trove of calculators, including FHA calculators and conventional calculators, that will allow you to check out those differences for yourself. And remember, don't just look at the monthly mortgage payment amount, but also take into consideration the long-term life of the loan. And if you're thinking that conventional loans sound kind of attractive and you want more information, go ahead and click right here for information on how to get a conventional loan with just 5% down. Thanks for watching, and I'll see you guys next time.